Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very exciting and interesting stock to cover, with a high volatility providing some opportunities and also potential pitfalls. It has many ongoing projects that may fuel speculations in the months and years to come. At the same time, it's having a difficult time providing the market some proof that it is a serious company that means business and that deserves investment in the long term. So in this video, we will go through the latest fundamentals, the price actions, and my analysis, as well as recommendation regarding if it is a good stock to be had. As always, if you appreciate what I do, please consider to drop a like, subscribe to my channel, and check out the links down in the description. Before we begin the video, I'd just like to state a brief disclaimer which may clarify what this video is about. What is presented is going to be my opinion and interpretation on how things will be. They shouldn't be viewed as investment advice and should be watched for entertainment purposes only. They may be able to help you make more educated decisions, but shouldn't be used as the only material to base your decision making on. Most of my analysis is done in the immediate past or just a few days before the uploading of the videos, and the price action may no longer reflect what you see on chart by the time this video is uploaded. But nevertheless, it's still useful because past momentums can always suggest what the future trends are going to be, or at least if my analysis is accurate. Also, the analysis will cover the stock as comprehensively as possible, and we're going to talk about more factors than just news and price actions. For instance, the company's financials, the stock market trends, the long-term perspectives, shareholder behaviors, and so on. They're all going to affect the timing, the quantity, and the actual decision. As most of us will be watching these videos for the first time, it is important to consider all these factors at the same time. So with that being said, let's begin with today's topic. Mullen operates in EV manufacturing, distribution, and marketing areas. It acts as a holding company for several brands it has bought along the way. The latest example includes Bollinger and Electric Last Mile Service. The company first began operating around 2014 as a successor of another, reiteration of the same venture called Mullen Automotive. They also had a previous company called Mullen Motorcars that has developed Mullen GT, one of the world's earliest EV supercars in the market. Overall, it's convincing to say that it's been around the block for a while. But the question is, one, whether they have enough money to stay around the block, and two, what is their actual goal in this field? We know that the sector has been known to be highly capital intensive and relying on other industries that are still growing on their own. There are also long-term challenges to keep the valuation multiplier as high as it is now, or as high as possible, avoiding the classification of industrial manufacturing company. Another source of challenge or distrust lies with the CEO himself. He has a track record suggesting that he tends to squeeze out the company's value, and by company's value, I really mean investors' money out of the company, as well as giving control to the company to some of his associates. Of course, those are speculations for the time being, but I believe that when there's smoke, there should be, or there probably was, fire previously. So for additional detail, you can look up what Hindenburg Research has said regarding Mullen. Again, it doesn't mean that what the Hindenburg says is necessarily accurate, but at least it should be used as a factor to consider in your decision-making process. The current price action is relatively challenging for Mullen, with its price action moving back to a historical low of around 20 cents, along with the bulls having a hard time pulling it back to where it was before at around 30 cents level. Over the past 5 days, the share price of Mullen went down by almost 30%, with the stock down by more than 60% overall. So I believe that the main reason why Mullen stock reacted in such a way is because of the shelf offering, suggesting that it's going to keep selling shares and diluting shareholders in the upcoming periods. And then this kind of fear quickly affected the rest of the retail traders, who are the majority shareholders in this case. This was already the case last week, and the circumstances haven't changed so far, except maybe the market mood went further down. Things are not pretty from a global scale, which, doesn't really help the company, the shareholders. Does it really mean that the situation is going to stay that low for a long time? Maybe not, because very often what happens is that when people see like a very low price, at some point they're going to think, well, you know what, this is a bargain. This is a discount. And then it might become like a self-fulfilling prophecy and go back up. Now, this is, of course, an optimistic scenario, but let's just say that this is possible, and it is definitely a thing with many growth stocks. So, like we've said before, the main reason why Mullen is in such a state is probably due to the upcoming stock offering in order to keep the ship afloat. We will later talk about the financials as well, but let's just say that operations are not currently bringing in any money to satisfy its own needs. As a consequence, people are anticipating for another round of dilutions of its shares, which will result in a decrease of share price. For Mullen, a lot of the times the reason we can find is something that is used to justify the shareholders' behaviors. So, in this case, the proposed stock offering is justifying the lack of optimism in the stakeholders' mind. Usually not the other way around, because let's say that right now the environment is very bullish overall. Okay, things are going through the roof for everybody else, and if at this moment Mullen proposes to sell more of its shares, I don't think it's going to have this kind of impact. But when the market is like in a bearish mood, and this kind of stuff comes out, then the reaction is going to be a lot more difficult. In terms of long-term price action trends, I would say that the company has been having a mostly bearish trend over the past 5 years, having traded between $5 to $10 for many years before peaking around $15 and finally falling to the penny stock level. What this suggests is that Mullen has been hard hit by the ongoing stock market downfall, and that its own fundamentals don't help. This assessment has really begun to change a little bit, but hasn't reached a convincing level yet, and that to a point explains why Mullen, in my opinion, is a stock that we can trade the swings, but I wouldn't say that we should invest for its potentials. So the interest surrounding the stock to begin with is the expectation to scalp a quick gain in a matter of weeks from short squeeze or the swings, so not necessarily yielding dividends from its car sales when they actually come out. With that being said, I also want to add that things can always change rapidly in a relatively young sector like EV, so the idea of investing shouldn't be completely ruled out. The online communities have initially been skeptical towards this company, with reason, of course. If there's no more EV hype to fuel the stock price to provide liquidity, the general mood has since then transformed to be somewhat more optimistic, sometimes blindly so, with many considering that Mullen might be the next Tesla, or if Mitchery is going to be the next Musk. Obviously, these are very bold assumptions. Some have also expressed worries about the lack of transparency Mullen has demonstrated in the past by not disclosing key economic actors with whom they work for example, their clients, the manufacturer of the iGo that they're going to distribute in Europe. So recently, the CEO also gave many announcements to investors that sort of kind of try to rekindle the optimism and try to change the public discourse about this company to say that, okay, see, they actually have projects. Just give them time and they're going to blossom. So basically, as far as the online footprint is concerned, the biggest factor to consider is if the price action gives people enough motivation to even talk about it. The other factors have sometimes served as a pretext to buy the shares, but they're not the lion's share of why we're here for. On top of that, the macroeconomic trends within the sector has been under a lot of pressure for several reasons, including the increase of interest rates, the capital flight from growth stocks to other options, the conflicts around the world, the supply chain issues, and the expectation that, or the assumption that we already have a recession and that it's going to be around for 2 to 3 years. It's only delayed because governments around the world temporarily shut down everything in the past and decided to give people helicopter money in many economies. Another factor to look at is how the flagship company of the sector, Tesla, has been doing. The EV sector is a relatively new industry with much of it still in development. Very often, people determine whether they should purchase EV stocks based on whether Tesla has been performing well. The idea is to profit from a sector-wide gravy train conducted by Tesla and pulling all the other ones behind it. We have seen it on multiple occasions how the share price of companies like NIO, Lucid, Mullen, and Xpeng follow a very similar trend to what Tesla has been going through. Of course, Mullen doesn't always follow the same trends either. It has played sometimes in its favor. For example, I have earned a couple months ago, I think, something like 100% plus in profits when everybody else was down. But it also sometimes plays against it, and very much so. For example, whenever people are down by 20%, Mullen might be down by 90%. So it's a very sharp double-edged sword, but it also provides some additional volatilities that is the bread and butter of traders. With that being said, let's also take a look at Mullen's financials, which might give us some hint of the decisions the company might have to take in the upcoming weeks. The first issue that we should look at is the cash balance. The cash balance has decreased, but for now it is not a major issue yet. The reason why cash balance is relevant to examine is because even if it's not an issue now, if the thing is decreasing too quickly, then it's only a matter of time before the company starts to dilute the shareholders once again. And this is going to have a very nasty effect on the company's price action. Because usually companies have 3 options to get money: from their own operations, to take on more debt, or to raise capital by selling the equity. In other words, dilute the shareholders. Right now, I think that the only option that they truly have is the third one. They can only sell shares. I'm not sure how much debt they can take on, and also the company's operations are not generating positive cash, at least for the moment. The liabilities of Mullen has been decreased by like $13 million, which is very good, except it didn't really have any positive impact on the company's price share, because in the same period of time, it went from like 55 cents down all the way down to 20. Well, actually all the way down to 30. And even if, I want to say that it's relevant for us because it decreases the insolvency risk and also decreases how much money that they would have to spend as contractual cash flow outflows. Ultimately, this kind of shows us that the market doesn't really care about the fundamentals for the time being, at least. And we should take this as a confirmation that this stock is mostly for trading. People are not in the mindset of holding it for the long term yet. The last element to look at would be the profitability. It's one of the bigger weaknesses of the company, and in my opinion, the main reason why Mullen has remained a stock to be trading. So from institutional shareholders' standpoint, this company hasn't generated revenue for more than a year. And despite the best effort to control the cost and to, maximize R&D, I don't think that that's enough. So the absence of operational revenue will eventually dig a big hole in its finances and forces Mullen to take either more debt to further dilute the shareholders, or to raise its capital, or to make additional efforts to increase the revenue. So my opinion is we gotta expect to see Mullen eventually selling more shares, because that's really the only thing that is the least risky one for the company's perspective. They don't have to give you anything in exchange of ownership, right? This may further cause tumbling down of the share price, which wouldn't help the company to be maintained on a Nasdaq. Eventually, I think that they're probably gonna go through like a reverse splitting, but this usually doesn't help the company to get back on its feet either. Like usually, this is a major weakness signal to say that we actually shouldn't be on a Nasdaq, but we still want to hang around, and this is why we're gonna do like a reverse split. So overall, the financial of Mullen shows us that the company wants to stay relevant, that it wants to, continue to attract investment. It's willing and sometimes can control its cost. But what we also need to see with the company's capacity is, we want to see actual operational revenue, which in December, we should see some of it because they're going to start distributing iGo in Europe if they can sell any insignificant number, to begin with. But that we shall see. So a few words about the shareholder composition. It's mostly retail, it's mostly volatile, and it's reactive to price action movements, which makes Mullen a good stock to trade and to speculate for the swings and the short squeeze. But even if there are some institutional investors and that their number might be increasing, it's not enough to change my view that for now, let's stay short term rather than long. I know that BlackRock has increased their holding in Mullen, but you have to think about it. If you want to invest in Mullen, of course, the upside can be huge, right? But do you have a portfolio that's as diversified as BlackRock? If that's not the case, then maybe the best thing to do is to still trade the swings. I mean, if your Mullen position is like 0.001% of your portfolio, then by all means go for it. And in fact, if it's 0.001, you also wouldn't mind if the whole position goes sour, right? A lot of us cannot afford this kind of luxury. At the same time, this lack of significant institutional participation means that, no one really trusts Mullen's long-term performance. And Mullen doesn't really necessarily have that kind of track record either, because all the previous ventures have failed thus far. Now, another major catalyst for Mullen is the significant size of the short positions. The reason why it's relevant is because short positions tell us what a significant portion of the market thinks of Mullen and whether they can be like the potentials for a new squeeze. Currently, there's about 40 million shares been shorted against the company. Most of them are traded outside of public exchanges in black boxes. So, therefore, we can say that it mostly comes from institutional traders. The potential for a short squeeze is therefore significant. The short squeeze is a phenomenon observed when traders decide to collectively buy up the price of a stock, forcing those holding the short orders to redeem their positions. And the reason why they may have to do this is because the positions are borrowed from brokers and the shares have to be paid back at some point. And the redemption would act as a second wave of purchase. With that being said, it's really important to control the exposure to a stock regardless of how interesting the price action seems to be. At the end of the day, opportunities will always be there, but your capital might not. Does it mean that a short squeeze will certainly succeed? Of course not. Nothing is for certain in the market. Now, on the other hand, with the information that we have, it's reasonable to believe that it could be worth our time to place a small position in Mullen in case the shares take off, sometimes for no reason. Overall, Mullen remains a very speculative stock to be kept at a marginal position in our portfolio. It might have a relevance to start putting in more cash if the stock price can be maintained for at least 3 to 5 trading days. Meanwhile, in addition to be, to have some potentials, we also have to remember the potential pitfalls ahead. The offering might cause some additional tumblings, and we might not have seen the end of it just yet. I would recommend to buy some stock for short-term swings if the current price can be held for at least 3 to 5 days, and to gradually dollar average in later as well. The recommended exposure would be 0.5 to 1% of the portfolio.